guys? It's May 16th, 2025. I want to give a quick shout out to all the subscribers and members. I'm going to do that every video, every breakdown, because I'm meeting new people every day. So I really appreciate you guys supporting me and following the channel and subscribing to the membership. We had a bull channel today. I really liked today. I didn't trade too much. I thought it was going to be more of a tight trading range day. I took one trade and got stopped out. Bar 13. I did it on NASDAQ. It was bar 13 on NASDAQ. Yeah, I got filled. It missed my target, and then it was a little bit more down here. Missed me and stopped me out. And I thought today would be more of a tight trading range, so I called it. I did watch the market rally though. Nice day, so I hope you guys caught some. There was a good setup. I really like bar 35 or 25. 25s. Yeah, 24. I like this one because 24 made 1 hour quickly. Quick touch here, sit through a small pullback 30, and I'm out on 31. So there were some good trades today. I saw 45, but I was skeptical on 45 because it's a third leg. Give me 1 second. Sorry, I had something in my throat. So I was going to count it from right here, but we could get, it's a small pullback trend, so it's hard to count legs because the market keeps going on and on. What creates a small pullback trend is trap traders. So in this case, bears are getting trapped. They have to keep buying back shorts, and the market never really gives a clean pullback. Like here, 40 is a pullback, but then 41 rallies, so it's forcing bulls to buy high. So that constant tension between bears getting trapped and bulls chasing the market is what causes trends and small pullback trends and things like that. Daily chart's really interesting to me. I really thought the market would go a little bit sideways, but reading that third leg down, or excuse me, third leg up, I'm going to say the leg count reset with this breakout. Leg 1, pullback, leg 2, leg 1, pullback, leg 2, pullback, leg 3. We'll see what happens. Today's rally, it wasn't that climactic. I mean, you look at climactic. Let's see. Let's look at May the 2nd. Oh, that wasn't. Well, there's a big gap up. So I don't know. I did see the overnight session, or yeah, I guess the after-hour session sell off nasty. That's not showing on the daily chart for whatever reason, but this is more of a doji than a bull body. Really nasty looking bar. That's good for the bears, and that's kind of what I thought was going to happen the last couple of days because of the swing point we were around. Here's a swing point, here's a swing point. Bulls did some damage to the bear trend, no doubt. Let's see, 15 bars above the EMA, and I don't think we're going to touch the daily time frame EMA in 1 bar, so they might get 20 bars above the EMA. If they do that, that would make the first touch of this EMA a good buy. The Albrook setup, is 20 bars above an EMA, lots of bull pressure. The first touch is generally a good buy, and then after that, it'll be the first gap bar, it's a good fade, and then slowly the bears will get more and more momentum. When it takes a long time for trends to turn around, I think of a ship. So think of a ship in the ocean. It doesn't just make a sharp U-turn like a car. It takes like a very wide turn. It takes time for the momentum to shift. So here you can kind of see how bears are starting to step up. Big gap up. This was a really big gap up. We go sideways to up, sideways to up. Then bears start to make money right around here. Bears officially make money here. That puts us in a trading range back into the EMA. Double bottom. It rallies. And then, yeah, bulls are buying an EMA. We're in a bull regime, so most bear setups are going to fail. And we can see most bear setups fail with this down leg here. I skimmed over the 15-minute chart real quick, so let's just talk about that to keep the consistency. Where is the first bar? Oh, okay. So this is the first. Where's the first bar? This is the first bar right here. Was today a gap up? It was a gap. No, we kind of just opened right around yesterday's close, so nothing too crazy. Very small gap up. The small gap up is the high of bar 1. and then it sells off. We get a trading range bar first 15 minutes of the day. So bulls are buying lows, bears are selling highs, and then it rallies. But then bears get the last 5-minute bar that closes on its low. 2-bar reversal looks like bulls want to keep going, but then bad follow through actually breaks the trend line. So there's a nested wedge here. Leg 1, pull back. Leg 2, pull back. Leg 3, leg 1, pull back. Leg 2, pull back. Leg 3, pull back. Leg 4. There's a lot of bull legs hidden right around here. So bulls are trying quite more than 3 times to go up. Here's the final leg, and it sells off. Big bear leg down. This bear leg is actually just testing a breakout point from yesterday. It's testing this bar here, and then bulls are willing to buy low here, hoping for a higher low, and that's what happens. This is somewhat of a 2-bar reversal. It's more of a 3-bar reversal, 1, 2, 3. So possibly on the 45-minute chart. I guess none of the times don't line up for that to be a... I wanted to see if this would be a doji. 75 to 8, or excuse me, 730 to 815. That's a 45. Actually, it kind of is a doji, but I thought it would be one over. So, and that's yesterday's price action. This is the bar we're looking at. These 2 bars. You can see it's shallow pullback on a higher time frame. Rally, pullback, rally, pullback, and a rally. So here we are, 3 legs down for the bears, and then it rallies, testing the breakout point. Bulls get a breakout, first pullback at 8:45, ends up being a better buy. Bears can't make 1R. Rallies again. Shallow pullback at 10:30 and 10:45, rallies again, and then we get 2 more legs up. So there's a few ways to count these legs. Again, it's a small pullback trend, so there's many legs. I'm going to count trend line breaks, and I'm going to count opposite bars. Leg 1, pullback. Leg 2, pullback. Leg 3, pullback. Leg 4, pullback. Leg 5, pullback. Leg 6, pullback. Leg 7, and leg 7 is barely making a new high. As soon as it made a new high, so well, not every new high. Generally in broad channels, today was more of a tight channel, but look what happened at the new high. Okay, swing high, sellers, new high, sellers, new high, sellers, new high, sellers, and then finally bulls are barely able to make a new high, and it sells off. So keep that in mind. If you're buying a new high, you might be buying the start of a pullback. Look at 34 to 30 to bar 40. This is the start of the pullback. We have 3 bars and a bad follow through. So there's bears here. There's bears at the high of 34. Market gets the high there, sells off. This is right below it, but bar 39 ticks above, it trades above bar 38, it sells off. And then finally there's enough momentum on 41. Even 41 had bad follow through, 42, but that ends up just being a 1-bar pullback, and it rallies for 3 legs. The legs I'm counting. So if this was a new breakout, leg 1, pullback, leg 2, pullback, leg 3. So some pretty interesting stuff going on here. Let's talk about the price action. Do the breakdown. Breakdowns have been kind of long, so I'm going to keep it around 20 minutes. Gap up from here to here, sells off. Bar 1, bear bar closing on slow. Bar 2 is a bull bar, but there's a tail, so it ends up being a pullback once we see bar 3 print. Leg 1, pullback, leg 2. Second leg traps are common in trading ranges, and now we have a bull bar buying. So bulls were inclined to buy the low of 3 instead of bears selling. Bulls bought this, and we get a 2-bar reversal. The first bull leg starts at the bottom of 3. Leg 1, it goes to the high of 6. Leg 1, pullback, leg 2. Again, second leg trap in a trading range. Look what happens when bar 6 travels to the high of bar 1. It sells off. We get a big bear leg 7. 7 has a bad close, so there's a bear and a bull leg. Leg 1, pullback, leg 2, pullback, leg 3. Now we have a wedge bottom in a bull regime. Bar 9 becomes a better buy. Bar 10 closes on its high. That's 3 legs higher. Leg 1, pullback, leg 2, pullback, leg 3. And each of those legs so there's also 3 legs here, because here's a bull leg, here's a bull leg, and the final bull leg is the low of 11 and the high of 12. I'm reading these from a fractal perspective, not visible. A visible leg would be this example. We could see the leg, and we can see the pullback, and then we can see the rally. So that's all on one chart. Right now we're in a trading range, so I'm counting fractal legs. there's a fractal leg here. It sells off and rallies. So there's a leg 1 for the bears, and that could be seen as a leg 2 for the bulls. Leg 1, pull back, leg 2, pull back, leg 3. Bar 12 trades above bar 11. So now we know the bulls are getting filled, but then it traps them. Trap bulls are going to get out, so they're selling out of longs, and then they get followed through for the breakout. Bears get followed through bar 13. 14 looks like good breakout, and now 15, bear bar closing on its low. So bears are making money. By the time bar 15 prints, I'm thinking we're going to go more sideways because of this type of price action. But then we see a 2-bar reversal, 15, 16, and 17. 3-bar reversal. 17 is closing on its high. Bad follow through 18. Bad follow through 19. Bad follow through 20. These all have sellers and they have buyers. It's trading range price action. Then we finally get a bull bar 21. Bad close and bad follow through 22. 23 sells off, but then closes right on the EMA. So there's a bulls bought the low of 23 and then it rallies. Bears are getting short here, just how the bulls got trapped here. Bears are getting trapped here, so they buy back shorts. 24 closes on its high. 25 closes on its high. Now bulls are trying to pick up momentum in the bull regime, but then again, we're still getting that bad follow through. At this point in time, it's still trading range behavior. We're right around the low of bar 12. And you can see that with 27, the market tried to rally. It ticked above bar 12 it went above bar 12 by 1 tick, but then it sold off. So bears thought this would be the start of a double top and a sell-off. 28 makes it look like that's going to happen. It's a bear bar closing on its low, bad follow through 29. 29 ends up being a pullback for bar 30. So what I'm counting is a leg 1 pullback, leg 1 pullback, leg 2. 30 ends up testing the high of 24. This is a trade I would have liked to be in, but I called it very early. 30 tests the high of 24, a breakout point for the bulls. The bulls that bought 24 made 1R very quickly. They get filled here and it rallies for another R, but in this case it ends up breaking out. So the bulls who are looking for a second leg here, they can hold for an all-day swing. Lots of money to be made on the bull side. 31, bull bar closing around its high, but still not above the high of the day, the bar 12, bar 27. 32, follow through. Again, not good follow through above the high of the day, and then finally we get it close above the high of the day, bar 33. A good close to and not a lot of tail. The follow through is tough. It rallies and it sells off, but it sells off right around the high of 33. 35, bull bar closing on its high, and then 36 inside bar. Every time it looks like the market's about to rally, it goes sideways to down. So that's that tension I was talking about. Bulls are being forced to trade them, chase the market. And then bears keep thinking it's going to reverse because this looks weak. And then all of a sudden, 39 happens. Bear bar closing on its low right above the EMA. Boom, they're trapped 41. That's the dynamic for small pullback trend is that bulls are constantly, in this case, bulls are constantly having to chase the markets and bears are constantly being trapped. That tension creates bulls buying highs and bears buying back shorts. So both traders are forced to buy the market. Bulls will buy in small portions and work their position in. Admittedly, newer traders, and I used to be one of them, will just buy their full position at a high and get trapped, and then it becomes hell. You're going to buy the high of 49 thinking it's going to rally, and then you sit through a deep pullback and you're like, oh man, it's reversing. So you short the low of 53, and then it starts to reverse higher, and you're like, oh, why did I short the low in the bull trend? So you buy the high of 55. And then 56 happens and you reverse your position again. I can definitely see someone doing that. I used to do that maybe about just a year ago, just a year or two ago. So if that was you, don't feel bad. It's just the trader growing pains. I think we've all shorted bull trends and bought bear trends before. It's just part of the game. So don't feel bad. What's important is to recognize gaps and the type of pressure we have stacking up. So in trends, gaps stay open, and I will just, let me just draw some gaps right now. So when gaps stay open in trends, that lets us know bears are getting trapped. Gaps happen around support and resistance. I have a members video about gaps. I think it's really important for you guys that want to learn more about markets and trending behavior to watch that. And it's a beginner's video, and I'll be going more in depth with it. The next video is going to be about breakouts dropping next week, and it's going to have a lot of breakout examples and be pretty lengthy. Breakouts are the breakouts are what move the markets because they trap traders. So it's going to be an important video. So check that out if you're a member. Be on the lookout for that next week. So here's just some gaps I drew off the cuff. We still have more than half the day to talk about. But these gaps are all happening around bear bars. They're happening around the resistance. So that lets us know that limit order bears are trying to short the high of 42. Limit order bears are trying to short the high of 45. And now they're getting trapped. They have two options. They can short higher or they can buy back their shorts. If you are one of these bears shorting, it's best to buy back shorts and wait for a long setup and take that. If your account is big enough and you feel confident that you can scale all the way in, and if you're going to scale all the way in, you're hoping for this, and you got to hold through that. That happened at 150, so I don't know. I don't know if that's the best for everyone. I think it's best if you're in a losing position to hit out, wait for a credible setup, and then take the next one. I don't know. I lost what bar count we were on. 41, breaking out above this pullback, 31 through 35-ish. We'll do 31 through 30. Yeah, 31 through 35 is a bull leg, trying to get second leg up, but the pullback is long. Look, the pullback took 30 minutes. The rally was 15 minutes, 20 minutes. So 15, 20 minute rally, 30 minute pullback, and then you catch the rally. You'll be forced to buy the high in 41. Bad follow through 42. Bull bar 43, trapping bears with the next bar over 44. This is not the strongest setup because it starts with a bear bar, ends with a bear bar. When we see gaps, we want to see a series of bull bars. So here's the gap made by the bears, and it's all the same color. That's the type of gaps we want to see. 46, bull bar closing on its high, but now we're tapping after a third leg. And let's say the leg count resets, leg 1, pull back with 2, pull back with 3. Market starts to go sideways. 47, bear bar, inside bar, not breaking new high, but there are bars below it. And then we have another inside bar. So we have an outside, inside bar. 49, bull bar closing on its high. 2 bar reversal, bar 50. Now this is a good look. About 80%, and there's an 80% rule that 80% of the time the market will continue to do what it does. So look how many times the bears tried to reverse here, tried to reverse here, tried to reverse here, tried to reverse here, here, and here. 1, 2, 3, 4, 5, 6, 7, 8, 9. So there's your 8 times it failed. So it's bound to work once, and then finally bar 50 works. Bears make 1R. This is another trade I would have liked to take, but I was done. I would have got. I might have taken a loss actually. I don't know where my order would be within this, but the bar 50 bears made 1R quickly. They come up, bar 55 is testing the low here, and then they have a small leg down, bar 56. Bar 56 doesn't make a new low. Instead, it closes above the EMA, and it has a tail below it. So we know bulls are still buying the EMA. Just like I said, I would have liked to be a bear and shorted this. Look what happened to all the bears that shorted 60. Bad, no follow through 57. They had a minute or two to get out at break even, and then it rallied. This was the nicest rally all day. 40 minutes of constant buying pressure, and this is the channel. This isn't a breakout. It's not a breakout because the bars are not closing on their highs. Instead, we have a lot of tail, so it's two-sided trading. So on a smaller chart, this is just a channel. You delete the color, put on the 1 minute, and there's your two-sided trading on the 1 minute time frame. Every new high sold off, new high sold off, new high sold off. So there's a channel, and we know that's a channel because of the tails on all the bars. There's a tail here, tail. That tail show two-sided trading. 66 is the first reversal down after 57 through 65. After 8 bars, first reversal down. And it led to a good scalp, 67, 68. 68 didn't have a good close. There are more sellers now. We're getting climactic. 69 inside bar. If you've been long all day, I think it's okay to get around anywhere around here. Even the low of 66 wouldn't be bad. This could be a higher high double top. So a higher high double top. But bulls get one more leg up all the way to 69, and then it sells off. This was the leg bars 50 to 53, or excuse me, bars 50 to the low of 54 that put the market in a trading range. You could even argue we were in trading range since this leg, and today was just a leg in trading range, which I do think the market it was, because look at the end of the day. So we were actually in a trading range since the bar on this chart 114 to 117. That doesn't make sense, please let me know, because it's important you guys understand the market cycle so you can place trades and understand probabilities. Bears get a channel down, 5-bar channel, and then a vacuum up higher. In training ranges, bars vacuum. And it's 3 legs, leg 1, pull back leg 2, pull back leg 3. Sideways behavior, and then overnight set, or the after hour session. Cells off, nasty. And there's the gap. So if we're in a training range, bulls are going to come for this gap. If this is a start to a new breakout, bears are going to keep these gaps open. I always feel funny doing targets on trend days because every target works. But we're going to do it just to be consistent, and then we'll wrap it up. It's Friday. I've been going past the 30-minute mark, so I hope you guys don't mind. Anyways, here is 1R, and that's met with bar right around here, and you can see the market went sideways. I really like this one the most, just because it's a very clean pullback right around there, right on there. Catch your 1R. Maybe you go for 1R bar in this. Let me delete these. Maybe you go for 1R bar 41. That's met. Hard to go for more than 1R once you get past the second leg. But here's a trading range. It breaks out. You buy 62. You get 1R here, but you're going to get a deep pullback, and this ends up being a retest of the high right here. Pretty interesting day. This is also a measured move, but that's a limit order trade. So see, now it would hit. So it really just depends how you measure. Anyways, guys, I hope you had a good one. If you're interested in joining the membership, hit the join button below. It costs $20 a month. That's less than 25 cents a day. And you're going to get detailed breakdowns about price action, gaps that trap traders. Next week's video is going to be breakouts. And breakouts are really important. So I hope you guys learned something. Thank you for subscribing and showing your support. If you learned something, share the show. Don't be a hoe. Have a good weekend. Have a safe weekend. No drinking and driving. And I'll talk to you guys on Monday.